Welcome back, everybody, to another Open Interest Newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano. Wonderful to see you all once again. Wonderful to be back on a nice, much clearer camera now. Much appreciated. Definitely appreciate everyone's patience in that regard. We are looking at a great day, I think, coming up. A great 5-day series coming up here in GameStop, seeing some pretty good signals through our options data, through some of our technicals, as well as seeing some good metrics by some of our other big hitters across the board here in the broader GameStop investing community. So we're going to break down some of these, on today's newsletter. So before we do, obviously we'll start with our gratitude. Today's bit of gratitude goes out. Thanks go out to Timothy Campbell for sponsoring today's newsletter and video breakdown. Thanks go out as well to our monthly supporters, Dat Scruffdo, Ken Wedmerlin, and Not Medical Advice for helping offset some of my data expenses and keeping this content free and open access to everyone. So yes, thank you very much as well to everyone who has contributed in the past and will contribute going forward. All much appreciated for continuing my continued research and publication here. So today, very interesting here, seeing this ad come through the company. Right, today's a little bit of memery, a little bit of tinfoil comes from the company Twitter account itself. Looks like GameStop right now is offering a deal. You can trade in your, what is this? I think it's the Xbox Series S for $469 worth of credit towards I guess in-store credit. Which has starting on 420, but culminating, interestingly, I saw this come through on 426. So if you have a pro membership, you can get this offer going through to 426. So that's going to be this Saturday. And I thought that was very interesting. A lot of people have been hyping up this 426 date going back a few days, right? This was in terms of Roaring Kitty's return to activity. 426 was the last day that he updated his Rory Kittinger charts over on startcharts.com. So that's a date some people have been excited about as a potential anniversary date, right? We always love a little bit of tinfoil dates. So something maybe there interesting to see. That's when this offer culminates. But also interesting insofar as what it looks like we could be seeing right now is getting ready for something of a price up, a leg up in terms of our pricing that more or less lines up with a similar phase of our volatility cycle back from November. So we'll take a little time to point that out today and why I think we may be moving into this kind of 5-day period of similar price action. So first off, right, we've been talking a lot about why the broader market context has been important for understanding our price action, right? Obviously, when we see bullish conditions in the broader market, this tends to be supportive of GameStop. One of the things that GameStop has shown is this time around remarkable resilience with respect to some of these crazy bearish conditions we've been seeing in the broader market. But one thing we have seen is when the market recovers, GameStop tends to move up a little bit more strongly. So what we've seen in the past is, right, the market will, if the market is stable or bullish, GameStop has shown some stability in the past. When it's bearish, GameStop ends up being bearish. So what we see is a reversal of that. The market is bearish, GameStop is stable, market is bullish, GameStop super bullish. So if we do see a little bit of this might correspond, I should say, a little bit of this type of recovery in the broader market. We could see the beginnings of a more dynamic up move in GameStop itself. And we do have some reason to think that going into today, we are looking at something of a very, very short-term recovery. So yesterday, we talked about the importance of some of our deeper moving averages, the 100-week moving average, which is synonymous with the 500-day moving average over on the S&P 500. We did go ahead and test that yesterday. We did show support at that level. We moved back above it and closed above that level. The options market responded to this by going ahead and building out a very optimistic daily profile in terms of our GEX. So our net GEX, we now have, really for the first time I think I've seen in a while, basically going back to that week post-March OPEX. Remember, that's what we're using here as our correlate. I'm comparing and looking to compare our situation coming out of April OPEX with that coming out of March OPEX. And it does look like, at least in the very short term, we might be setting up for that. Right now, the options market is betting on long calls, on a recovery, on a continued recovery into today's trading day, at least for a significant portion of today's trading day with respect to the broader market. So this may provide the type of context necessary and, let's say, conducive for GameStop to see a little bit of dynamism on its own accord. Yesterday's price action does look like it was partially determined. It was partially influenced by this downturn. But once again, we showed support down at that 2570 historic support level. And in fact, we showed support all the way heading down, let's see, down to our technical spot here. Yeah, so to this, so here's how I've illustrated this here going back on our 4-hour chart. So this is Thinkorswim here, right? We can see how many times this level, this 2570 area, has proved to be a significant price level over our past couple of months here. So a couple times it served as kind of a resistance, a kind of a hang up, so a kind of a stutter point here at different points over the last couple months during this liquidity phase into Q4 earnings report. But more often in our up phase of our volatility phase, our price movement in November, it served 3 times as a very potent support, including one in which it was synonymous. It coincided, I should say, with the 54-hour moving average. Now, what do we see here? Fast forward for today, and what did we see with yesterday's bottom? Yesterday's bottom in particular also coincided with a touch of that 54-hour moving average. We can see that on the 4-hour chart, our simple moving averages are moving up into that position, that fanned out rainbow position. I think Richard's referred to it as a rainbow position. Right, heading into our price action here. So we see that, right, the 20 stacked on top of the 50, on top of the 100, on top of the 200. So now we can see that we're right about set up there heading into today's trading. So 20 on top of the 50, on top of the 100, on top of the 200, 4-hour, all of that is looking very good. And we did see some support there intraday, which I think was responsible. That was most of what signaled this very dynamic move back to the upside into the close yesterday. Now, what was also interesting is we have seen some pretty interesting fluctuations in terms of our IV. IV was very down yesterday, still elevated in terms of our overall volatility versus liquidity phases with respect to GameStop's price action. However, we did reach something of a nadir, if you would, within that kind of volatility bracket, and even saw some really interesting lows in terms of our individual week implied volatility levels, right when we were getting close to that 2570 level. Yeah, very, very, very conspicuous there in terms of how low that implied volatility was. Certainly begged the question, made long, this is, I guess, shifted towards our May, right? I've been talking about this. I talked about this yesterday, how much lower our IV for these late expiries in May was. These actually were even lower. So 23 and 20th or 30th of May got all the way down to 69%. Nice implied volatility intraday. It came back up to 80 by end of day close and heading into today's trading. But what could be causing this? So we do see that institutions are still looting shares of XRT in sizable amounts. Shares outstanding are now down to 3.4 million, which is on the lower end of the spectrum. We've only seen a handful of days in the past couple of years that have been lower than 3.4 million. One of them was a 2.35 million mark just about 2 weeks ago, so on the 4th of April. And we see at the same time that GameStop liquidity is going up. So we see this continued relationship, XRT liquidity going down. In fact, about 65% of the net assets under management, which just themselves were created over the past 2 weeks, have now been redeemed. That's a very large outflow. That's over $400 million in net asset value outflows with respect to XRT. Richard's also been pointing out IWM has been seeing some net outflows in sizable amounts. We did see a pretty sizable IWM creation order about maybe about a little less than a month ago. But right, we see these shares available to borrow on GME continuing to go up. So we've pointed out that as GameStop lending liquidity goes up or short liquidity goes up, as it becomes easier to borrow shares of GameStop, this generally correlates with a decrease in implied volatility. Now, when implied volatility gets very low, when it gets heavily crushed, we often see large price transpositions to the downside. Now, what this might mean is in a couple of the weeks to come, maybe not immediately. I think Richard's been talking about this as well. In the couple of weeks to come, maybe after this next week, we may see something of a little bit of a more pronounced retracement, especially if we do see a bigger upside move over the next 4 to 5 days, based on this particular liquidity, right? This liquidity can be used in order to hammer GameStop's price down. However, right, we continue to see bullish technicals. We've only really just begun here to start this kind of volatility phase. So you can see it's much longer. They don't go only about 3 to 4 weeks here, as we've seen. This is about, just about 3 to 4 weeks. That's not typical, right? We see this stretch out, like our last one here stretched out for about 8 to 10 weeks. So we've got probably a second half of this to go. I think we've probably got one more week here of the first half of this price movement phase, just like we saw back in November. If we take a look at this chart here, right, we can see, I think I mentioned this, we talked about this a little bit on one of our live streams, right? These volatility phases, or at least what we've seen, usually they're subdivided into two kind of 5-week chunks. So we're getting close to the end of this 5-week chunk here, and it looks like we're about to get this move. So, right, a bullish move here that'll take place over the next week. So this price action here from our touch of the 54-hour moving average, then over the next 5 days, so this was the 19th of November into the 26th of November, we saw a very large upward price move. So this was actually from like 25.70 all the way to $32. I do not necessarily know that we're going to go to $32, but some sort of decently sized bullish price move, a leg up here coming out of this particular date, I think is possible. So something, a test of that kind of 30 area. Maybe we go back to our high. Maybe we go back to the face value on the bonds, which is something like 29.80. I think they're like 29.85 or something like that. So we could see a move like that over the next 4 to 5 days, basically into next Monday. It does look like some of Richard's models are pointing to something like that as well, either into the 25th, this particular week's expiry, or going into Monday's trading. So yeah, we could see a move like that, but of course it's important to keep in mind what came right after that was this sort of mini crush. So repositioning of the price down within this trend. Now, it didn't stop the overall volatility trend as a whole, but it did show this kind of intra-trend kind of correction. And then we got another 5 weeks of movement to the upside. We got some new highs. But we really saw these two different phases, right? It didn't just go parabolic. It kind of got reset, contained, and then was allowed to continue for a period of another 5 weeks. So we could see something like that. We move up for a week. Maybe we move up, test this 30 area, then get kind of moved back down here before another 5-week phase settles in. And we'll have to see what the company has to say about that in terms of potential additional offerings, or whether arbitrage traders will re-enter shorts or something like that. That's a question for another time. But I think we could see a parallel move like that. That's something I'm particularly looking for. That's something, right? I've adjusted my trading and some of my positions accordingly in order to account for the fact that I think this move is likely coming. We did see options kind of drop off in terms of overall activity yesterday. If we do start to move pretty strongly to the upside, I expect this to tick back up. We're still trading below our average volumes. We have been for the past few days, but we are higher than we were toward the end of last week, with about 7.5 million shares traded on the day. Calls yesterday, mostly bullish or mixed. Puts, mostly bearish or mixed. We did have a retraction of OI at the 22 strike. So whoever has these long puts, had a lot of these long puts at 22, just decided to cut the loss on those. Took over 1,000 off the board. We did see a trader open $30 calls. Quite a lot of $30 calls heading into short, actually, heading into May 23rd expiry. So just about exactly a month out, right? These are 31 days to expiry. So it'll be interesting to see what happens to this position. He's already up on it quite decently, even where we ended the day, since ID ended up much lower. At the same time, right, we did see Max Payne move up. So Max Payne's now at 25.50. Good place for it, considering where we've shown some considerable strength at that 25.70-ish historical support area. Gamma exposure, however, does say that we could, in the interim, right, if the options market does want to come out and do this, could push us to the downside. We could just kind of rinse and repeat that same move that we did yesterday, which is to kind of go down toward Max Payne, what is now Max Payne, that 25.50 area, and then move back up dynamically. In fact, we saw this, right, the fact that in the short term, the 26 and the 25.50 area was so negatized did result, right, that did allow us to kind of go ahead and pump up through here toward that, toward that close that was, I don't know, pennies above the open or right slightly below the open. So, I mean, we could run that again, but we could also, really, if we move above 27, it looks like we'll get into this kind of grindy, maybe upward move over the next few days into this territory. I don't think it would go beyond 30 based on how our options, how our options gamut is set up, especially in the short term. We do have some up here, but I don't think we'd have a lot of options. I'll say this: a lot of long calls would have to come on the board in order to really challenge the resistance of that $30 level. I would still assume that if we get an up move, it would stay to the downside of 30, and we would get something of a correction, back maybe toward the 26, 25, 50 area, maybe for the week or the 2 weeks following that type of test. Again, something like what we saw following that move on 11.19 into 11.26. So it doesn't necessarily have to play out exactly that way, but that's what I'm looking at right now. That's kind of my leading theory of price action. Certainly be looking forward to evaluating this, seeing how this plays out, and discussing some of these factors, of course, together. Once we resume our live stream, right, we'll be back to our regular Friday time at 4 p.m. Eastern time. I'll also be, of course, covering this live as I do every day, before market open, going over some of this. So look forward to seeing you all tomorrow. Look forward, of course, to seeing you at our live stream at the end of this week. So let's good luck out there, and let's fingers crossed we get this nice 5-day bull move. So thanks everyone as always for watching, listening, and we'll catch you tomorrow.